So you may have heard about cars being deductible for your business or buying cars tax-free. Well, in this video, I'm going to be letting you guys in on a little strategy a lot of major corporations and Fortune 500 executives use that's available to you and your business right now. Let's get into it. So there's two options for taking a deduction for your vehicle: the standard mileage rate and the actual expense method. First up, we'll be talking about the standard mileage rate. This method is great because it can be used with a car you already own. You just have to track your business mileage and personal mileage on the vehicle. The easiest way to track mileage is with an app. Here's some, I don't know where they're gonna come up. I use Stride because it's super easy and they have a couple other benefits outside of mileage tracking, but just check whatever app store you use for mileage tracking apps. The reason we need to track our miles is because the deduction we receive is based on a formula: business miles driven times the current mileage rate. For 2020, the rate was 57.5 cents per mile, and for 2021, the rate is going to drop to 56 cents per mile. So basically what that means is for 2021, you have a tax savings of 56 cents on every dollar. So if you drove 15,000 miles in 2021, your standard mileage rate deduction would be $8,400. You can also deduct part of the interest expense on your car loan for the business use of the car, personal property taxes for the vehicle, and parking fees and tolls under the standard mileage rate. The next way of figuring a vehicle deduction is by using the actual expenses method. This method is used to deduct the actual expenses you incur from using the vehicle, hence the name. Using this method allows you to deduct things like lease payments, not your standard loan car payments, leases, insurance, vehicle registration, gas, oil changes, repairs, maintenance, and depreciation, which is how you get the car for free. But more on that later. No, if you use your car for both personal and business, your deduction is going to be based on the percentage used for business. So for example, if you use the vehicle 30% of the time for business, you can deduct 30% of your lease payment, 30% of your insurance, so on and so forth. The method you pick really depends on the type of business you have and what you use the vehicle for. So if you're an Uber driver or delivery driver, the standard mileage rate may be the better option for you because you will have very high mileage, depending on how much you work, of course. But if you're a web designer, you might not even use your car every day. So your mileage will be very low, and the better option would probably be to write off all the other expenses you incur for using the business under the actual expenses method. Now on to getting your business car for free. This is done through a method called depreciation, which can get pretty complicated, but for the purpose of this video, depreciation is an annual tax deduction that allows you to recover the cost of the car over the useful life of the vehicle as described by the IRS. But as of September 2020, if you purchase, not lease, a vehicle that weighs over 6,000 pounds, you can utilize Section 179 of the tax code to deduct up to 100% of the purchase price of the vehicle in the first year. No, a car first used for personal purposes can't qualify for the Section 179 deduction in a later year when the car's usage changes over to business. The car needs to be used more than 50% for your business. And again, the higher the business usage, the higher the deduction. The closer we get to 100% business usage of the vehicle, the closer we get to our business car being free. This strategy can be beneficial to a business that has a really high tax liability, a tax liability equal to the cost of a car. So this is how it works. If your business has a tax liability of $75,000 and you purchase a business vehicle over 6,000 pounds that costs $75,000, you'll be able to reduce your tax liability to zero. Yes, you still have to come out of pocket $75,000 in total, but at least you have an asset that can be used in your business to help increase revenue instead of unnecessarily giving it to Uncle Sam. You do not have to purchase the whole car up front to take advantage of Section 179. That's why lease payments and car loan interest are deductible. I keep using air quotes around free because if you ever sell the vehicle or start to use the car less than 50% for business, the depreciation deductions given to you will have to be recaptured or included as income in the year you sell the vehicle. So this strategy is for long-term planning of high tax liability businesses. If your business doesn't have a high tax liability yet, you can still use the Section 179 deduction, but the standard mileage rate or actual expense method might be a better option for your business right now. Since y'all have made it this far, go ahead and hit that like button for me. Help get this information in front of other business owners that can use the help. If there's any other tax tips you guys want me to cover, leave suggestions below. Otherwise, go ahead and book your free 30-minute bookkeeping consultation or free tax return estimate by visiting my website, luxurytaxprep.com. See you guys on the next one.